Today, I'm diving into a hot topic that's shaking up the global economy: Saudi Arabia's oil production shift. If you're curious about how this impacts oil prices and what it means for the world, stick around. Alright, so here's the scoop. Recent reports indicate that Saudi Arabia, the largest oil producer in OPEC, might be gearing up to increase its oil output. This is a big deal because it could signal the end of their unofficial price target of $100 per barrel. Imagine the ripple effects this could have on the global market. Now, why is this happening? Well, Saudi Arabia is looking to avoid losing market share to non-OPEC producers like the United States. They had initially planned to start unwinding production cuts in October 2024, but a 2-month delay has stirred up speculation. Weak demand from a struggling Chinese economy has also played a role, causing Brent crude prices to dip below $70 per barrel. But now it seems they're committed to ramping up production by December 1st, regardless of market conditions. This potential shift has far-reaching consequences. For instance, Russia, a key OPEC Plus ally, could see its economy and military activities affected due to lower oil prices. Russia's ongoing conflict in Ukraine relies heavily on oil revenues, so this is no small matter. Interestingly, OPEC has denied setting a new oil price target, but rumors are enough to cause concern. Saudi Arabia's role in OPEC is crucial, contributing 2 million barrels per day out of a total of 3.15 million in OPEC Plus production cuts. Unlike Saudi Arabia, other OPEC Plus members have struggled to meet their quotas due to various constraints. Now let's talk about what commodity analysts at Standard Chartered are saying. They argue that Saudi Arabia's rumored increase of 84,000 barrels per day starting in December doesn't necessarily mean a shift toward prioritizing market share. Instead, it could be a wake-up call to OPEC Plus members who aren't complying with production cuts. Compliance is key to maintaining tight oil markets. Russia, Iraq, and Kazakhstan have submitted compensation plans to OPEC for their overproduced crude volumes from earlier this year. If they stick to these plans, it could result in significant production reductions in the coming months. Despite the potential for increased production, Saudi Arabia faces financial challenges. The kingdom is dealing with a budget deficit, needing oil prices of $96.20 per barrel to break, even due to the ambitious Vision 2030 development program. With current oil prices, they're producing less oil at lower prices, worsening the budget shortfall. However, they believe they can weather this storm through alternative funding options like tapping into foreign exchange reserves or issuing sovereign debt. So, what's the takeaway here? While the oil market remains uncertain, OPEC Plus is unlikely to flood the market with oil like they did during the COVID-era crash. Saudi Arabia is focused on ensuring compliance within OPEC Plus, despite the challenges posed by lower oil prices.